This is one of the biggest earning weeks of the year. We've got trillions of dollars worth of companies reporting their earnings over the next several days. In this video, I'll walk through the earnings schedule and highlight key companies along the way. Hey guys, it's Jared from Holy City Family here. Our goal is to empower you to achieve financial independence and to provide the best education for your children so that everyone can pursue their dreams and ambitions in life. If it's your first time here, thank you for joining us. Make sure to hit the subscribe button and the notification bell to receive our weekly videos. So here is the earnings release calendar from Earnings Whispers that they send me on a regular basis, and I love it. It's a great collection of all the different companies that are reporting this week, and it just so happens that this week is packed with companies like Facebook, Logitech on Monday, companies like AMD, Microsoft, Alphabet, Visa, Robinhood, Enphase Energy on Tuesday, Ford, Teladoc, GM, Boeing on Wednesday, and then on Thursday we have Apple and Amazon back to back after the close reporting their earnings. And then also a slew of companies on Friday reporting their earnings. So what we're going to do is go through these one by one and pick out the key companies for each day and just walk through those in some detail. First up is Facebook. And here's a quick overview of the company. Facebook Inc. develops products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide. A few key highlights to note are that earnings are forecast to grow by 14.48% per year. Earnings have grown 65.6% over the past year. Also, from an earnings perspective, historically, after this company reports their earnings, the stock usually moves about 4%. So that could be 4% down or 4% up, but overall 4% on average. Now for Facebook, we also wanted to talk about the snowflake analysis on the right-hand side. This is something that we get from Simply Wall Street, and we look at this for each one of the companies that we follow. For Facebook, you can see that it has a very strong financial health. It also has very strong past performance and about average, I would say, for value and for future growth. It also does not offer a dividend, so that's why that's so low. So let's also take a look at Facebook product highlights. I wanted you guys to be familiar with the company and to get a taste for what they offer. A lot of these you guys are going to be familiar with, but when I think of Facebook, I have to admit I usually just think of the Facebook app. But when you dig a little deeper, you realize that yes, there's definitely the Facebook app, but then you also have the Messenger app, you have Instagram, WhatsApp, Workplace, and a number of other apps as well. Things like Oculus is another one. So here's what Facebook looks like after they reported their earnings after market close today, which is Monday night. So as you can see, the stock price is $332.25. After hours, the stock went up 1%. And on this chart, we have the one-day performance just to show you guys how the stock moved after earnings. And you can see the purple line is right after 4 o'clock when the market closed. So also to give you some perspective beyond just the one-day look, we wanted to show you the 1 year performance so you can see that chart. And I did want to point out that something that we're looking at is that the stock overall is down from its previous high about 18%. And we have been actively buying this as it's been going down, and we'll continue to do so. So we're curious to see what tomorrow holds after they just reported their earnings today. So another thing we wanted to do is break down some of these key companies and talk about the pros and cons of each. So for the pros on Facebook, one thing that we really like is that the company has a wide economic moat. They have a 21% 5-year growth. They have a 9% debt to equity ratio, and we usually look for about a 40% debt to equity ratio, and that's according to Warren Buffett's teachings. Also, Facebook has a 22.58 forward PE ratio, which we'd probably prefer that would be at 15, but I think right now that's actually pretty good considering the valuation of the market as a whole. Also, we use a lot of different Facebook products firsthand. We use it for both personal reasons and business, such as Instagram, the Facebook app, WhatsApp. And also, this is within our circle of competence, so it's something that we feel comfortable investing in for the long term. From the cons perspective, one thing that we don't necessarily like is we see a lot of tightening regulation and intervention from the government. It seems like Zuckerberg is always fighting with somebody about something that Facebook's doing or something that it's not doing. Also, we have current and future competitors to worry about with Facebook. A prime example is Amber and I actually met on MySpace back in the day. And a lot of you may not even know what MySpace is, but I assure you that at one point, MySpace was the most popular social media app. And Facebook was kind of like a kid's toy that some of the younger kids played with. But MySpace was by far more popular, and that's actually where Amber and I met. And so I just think that that's always something I consider in the future, that, hey, we might turn around one day and all of a sudden nobody remembers Facebook's name, but there's some new trendy social media app that's out there that replaced it. So now let's go into Tuesday, and we'll talk about some of the companies that report after market close. The first one on that list that we want to go through is AMD. So a quick overview of that company. AMD, or Advanced Micro Devices, operates as a semiconductor company worldwide. A few highlights for the company: earnings are forecasted to grow at 14.72% per year, and earnings have grown a whopping 465.4% over the past year. From an average move perspective on earnings, that has been 6% on average. And I also wanted to look at this snowflake analysis on the right. This is something that we look at for all the companies that we follow on Simply Wall Street. And you can see that the financial health of this company is very strong. The past performance and future performance also not bad. According to Simply Wall Street, though, the value looks like it's pretty low, and this company does not offer a dividend. So next we're going to talk about AMD product highlights. So as you can see, AMD has a lot of different products across different categories. The first one are desktop processors. Now, I think this is where they really shine. When we were looking at getting our video editing desktop, it was pretty clear to us that the AMD processors were just killing Intel at that point in time. I think Intel had some delays on some of their latest processors, which might be out now. But at the time that we were looking, which was about 6 months to a year ago, AMD had the upper hand on the CPU side, which was really surprising because in the past, when we had bought PCs and things, it always seemed like Intel was in the lead, but by now, things have really changed. And if we go down to the graphics cards, I think that AMD does have some great graphics cards, but just when we were looking at the video editing desktop, it seemed like NVIDIA beat them across the board in just about every category on the graphics cards. So that's something to consider as well. So here's some additional product highlights for AMD. The data center solutions, so they have chips that specifically go into servers for performance, like AMD EPYC chips for that side of things. And then there's also a product called AMD Instinct, which are accelerators. And those are primarily the 4 categories of products that they offer to customers. So now let's look at AMD from their 1-year performance, and let's look at this chart. So you can see I drew a trend line from May 14th to today, and you can see that AMD stock prices followed that pretty well. And from that point on May 14th until today, that's been a 70% increase in the stock. So it's been performing really nicely. It's at all-time highs at this point, and it's on a fairly steep uptrend at the moment. Now we're going to walk through AMD pros and cons. So on the pro side, the 5-year growth rate is 31% per year, which is pretty solid. They have a 9% debt to equity ratio, which again is pretty solid considering we're looking for something under 40%. Their 10-year return rate is 2,000%. And we use AMD's products like we talked about with our video editing desktop and other PCs that we've bought over the years. So we've got a pretty good track record and pretty good history of their products. This is also within our circle of competence, so it's something that we also do feel comfortable investing in over the long term. For the con side of things, one risk that we see is that there's no economic moat from their competitors. They also have competitors from their CPU side, which would be Intel and perhaps some others. And then on the graphics side, it's NVIDIA. Also, more recently, we've seen a trend of companies like Apple, Alibaba, and Microsoft making their own processors. So that's also a threat and a competitor for AMD. Next, we're going to take a look at Microsoft, which will be reporting its earnings on Tuesday afternoon after the market close. Microsoft Corporation develops licenses and supports software, services, devices, and solutions worldwide. Earnings are forecast to grow at 9.33% per year, and earnings grew by 38.4% over the past year. The average move on earnings is 6%, and if you look at the snowflake analysis on the right, you can see that Microsoft is fairly well-rounded compared to some of the other companies. They have a pretty strong financial health, past growth. I'd say future growth and value are pretty average, and then they also do have a dividend. Here's some Microsoft product highlights. They have a new Surface Pro 8. They have a new Surface Laptop Studio. They have reduced their Xbox Game Pass to $1 per month on its lowest level. They've released Windows 11. And they also have made a lot of enhancements and changes to Microsoft 365 to put that on the cloud instead of the previous software that you had to install on your computers. Let's take a look at Microsoft's one-year performance. As you can see, the stock is now at $309.50. And you can see with the trend line that company is progressing upward pretty nicely and consistently, staying within that trend line. Let's talk about the pros and cons for Microsoft. So on the pros side, they have a wide economic moat. Their 10-year return is 1,262%. They were founded by Bill Gates, and that's nice that he's still involved and still participating in the business and making contributions. We've also had a lot of experience, I'm sure a lot of the viewers at home and ourselves, we've had a ton of experience with Microsoft Windows, with Office 365, which is now cloud-based. Azure Cloud is coming on strong, and that's a big focus for Microsoft moving forward. They also have Xbox, LinkedIn, artificial intelligence, robotics, cybersecurity, and more. So they have a wide variety of products and services that really have stood the test of time, and they've also adapted. If they've gotten to the point where they were outdated, such as Office 365, they've now updated that so that it's now in the cloud, just like a lot of the other competitor software like Google. Now on the con side, some of the threats and risks out there are tightening regulation, future competitors, and some of the software, like we said, it may be outdated, and some of it's been around for a long time. And we're also aware that there are risks around anti-monopoly policies. Okay, so the next company to report on Tuesday after market close is Alphabet. Let's walk through a quick overview of this company. Alphabet Inc. provides online advertising services in the US, Europe, Middle East, Africa, Asia Pacific, Canada, and Latin America. Their earnings are forecast to grow by 12.66% per year. Their earnings have grown by 99.6% over the past year, and their average move on earnings is 5%. Now, if we look at the snowflake analysis from Simply Wall Street, you can see that their financial health is very strong, their past performance is very strong, and their value and future performance is on the average side, and they also do not offer a dividend. Let's talk about Alphabet product highlights. The first thing that we show is the Google Chromebook. And it's actually really hard to break down the product highlights because there's so many different products. There's actually like 2 different full slides of just names of different products that Google has. So I'm going to highlight a few of those, such as YouTube TV, their new Pixel 6 that is now available, their Google TV. They also have, like Apple's AirPods, they have Pixel Buds, so a less expensive version of that same product. They have Waze, and they also have Google Maps, which we use all the time. Now let's take a look at Alphabet's one-year performance. As you can see in this chart, the 1 year is following this teal trend line that I drew on the chart. It's following that consistently, and the stock is currently priced at $2,804 per share, and the stock is up 72.55% in the past year. Now for the pros and cons. For the pros, this company has a wide economic moat, which is great. It has a 20% 5-year growth. 12% debt to equity ratio, a 251% 5-year return. It's a company that we're very familiar with. We've used the majority of the products that they offer, and we've been very satisfied with just about everything that we've used. They also have a very wide and diverse product offering, like we mentioned. There's so many different products that Google offers, and the one thing that we didn't even talk about is the Google.com, the search engine, their main product. Now for the cons. It's hard to buy this on sale, and what we mean by that is it's hard to buy it within the margin of safety, lower than its fair value, and what we typically look for is for the company to be 40% below its intrinsic or fair value. And that's just been difficult for us to get with Google. So it is a company that we're interested in long term, but we're looking for an opportunity to buy. Going down the list for the earnings report on Tuesday, we've got Visa. This is a company that we are invested in, and we're looking to add more to our position, but just a great consistent company similar to MasterCard, where they make money every time anyone uses their Visa credit card, and they make that transactional money every time. So it's been a really great company to invest in, and something that we're definitely interested in adding to our position after these earnings reports. And next we have Robinhood will be reporting, and that's also a company that we do have a position in that we're looking to add more. This is just a company that it's really been revolutionary. It's changed the way that a lot of the different brokerages out there have worked. Robinhood has changed it so that now these brokerages are offering free trades instead of, I can remember when E-Trade and companies like that were charging $8 per transaction to buy and then $8 to sell. So Robinhood has come in and really revolutionized that. They also offer a very user-friendly app that I've used, and I have a lot of friends that have used it, and it's just a very good setup for a beginner investor. And then for Enphase Energy, this is a company that we do own shares in and are looking to buy more. This is a solar company for solar energy, and it should be interesting to see what happens on Tuesday. Now if we go to Wednesday, we've got companies like Boeing, GM, that will report earnings before market opens. And then in the afternoon, after the market closes, we've got Ford and Teladoc. All four of these companies are companies that we're interested in investing in. Boeing is actually based in Charleston, where we are. So that would be great if that company could get back on its feet. It's been struggling for quite some time. I think it was even pre-pandemic, but the pandemic really has not helped anything on their front. So it's a company that we have been invested in the past, but we've just tried to stay away from it given all the challenges that they're facing right now. Also from an electric vehicle standpoint, we really like what we see out of Ford and GM. And I've got some pictures to show from a recent Car and Driver report, an article that we read. Also for Teladoc, this is a company that we're invested in, and we're looking to add more to our position. And this is something that's telemedicine, very important and critical during the pandemic times. And it's something that we've used and we've gotten accustomed to, and I see the long term as being bright for that company and companies like it. So here's the Car and Driver article that I was referring to, the 12 best-selling electric vehicles of 2021 so far. And this was written on July 19th, 2021. The first, I think out of the top 5, they were all the different models for Tesla, were scattered within the top 5 or 6. However, we did see for number 3, the Chevy Bolt, which is made by GM. They sold the 3rd most units as of the date this article was written. And next for the number 4 on this list is the Ford Mustang Mach-E, which we think looks pretty cool, and we like to see that Ford is doing that. We've also seen that the F-150 is coming out soon, and given that that's one of the most popular pickup trucks and one of the most popular vehicles in America, we're really excited to see what that does, and we're definitely interested in following Ford to see what happens in the future and also to see how their earnings look. So let's take a look at Apple, and here's the overview. Apple Inc. designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. Their earnings are forecast to actually decline by 0.8% per year moving forward. I think it's over the next 5 years is the way that Simply Wall Street does that. Their earnings grew by 9.6% this year, and the average move on earnings is 4%. Now if we look at the snowflake analysis for Apple, we can see that The score is pretty low on the value side and in future growth, and it's about average in past and financial health. Here are a few product highlights from Apple. So first we have the iPhone 13 Pro, the MacBook Pro, we have the AirPods, the HomePod Mini, all the different watches, the Apple watches that they have. Now they're up to Series 7 is the latest model. They have the iPad Mini and a number of other products. Okay, next we're going to look at Apple's 1-year performance. And as you can see in this chart, the Apple shares are now $148.57. Over the past year, the stock has returned 30.31%. And as you can see in the 1-year chart, the stock is progressively moving higher and higher, and it's just really slightly off of its all-time high. Let's talk about some of the pros and cons for Apple. On the pro side, it has a narrow economic moat. Granted, we wish that would be a wide moat, but it is better to have a narrow moat than nothing at all. The 5-year growth for Apple is 14%. The 10-year return is 1,119%, which is not bad. The forward PE ratio is 24.43. And we use Apple products every day. We use the iPhone, we're actually using the iPad right now and the iPhone. We use the AirPods and a number of their other products over the years. And overall, we've just been really satisfied with their products and really content. On a personal note, I used to have an Android. I forget, I've had different Androids over the years, but I just, for some reason, never made that jump over to an iPhone. And it got to a point where my wife, Amber, actually had an older iPhone. I think it was an iPhone 7. And I had the latest and greatest Android. But for some reason, my Android was just acting sluggish and just had all kinds of issues going on. And there was really nothing wrong with it. It was pretty much a new phone. And I just happened to use her phone, the iPhone 7. And it wasn't even the latest model at the time. And it just blew my Android out of the water. And from that point on, I started using an iPhone and Apple products more and more. And I've just been very satisfied with that. Now for the cons. One thing that we don't necessarily like about Apple is their debt to equity ratio is 211%. And like we said earlier, we'd really prefer for that to be at 40%. There's also a number of competitors to think about and government regulations, especially given how large Apple is. And there's always that fear or threat of the company being divided into smaller pieces and smaller segments. Okay, so next on our list, again, this is on Thursday after market close, we have Amazon. So let's take a quick look at Amazon and look at the overview. Amazon.com Inc. engages in the retail sale of consumer products and subscriptions in North America and internationally. Earnings are forecast to grow at 28.66% per year. Earnings grew by 123.4% over the past year. The average move on earnings is 4%. And as you can see in the snowflake analysis from Simply Wall Street on the right, Amazon looks really strong in the financial health, past growth, and future growth, and a little low on the value and also does not offer a dividend. Now let's take a look at some of Amazon's products. So first they have this little gizmo on the upper left-hand corner, they call this the Scout. Now I have not seen this on the East Coast, but it looks pretty cool and I'm definitely interested in seeing that firsthand. I've heard it's on the West Coast. And then on the right-hand side, we have the Prime Air. You have Amazon Prime membership free for 30 days. They're running a promotion. The Amazon.com website itself, Amazon Prime videos, and then also Amazon Fresh, the grocery store. They've been working to convert Whole Foods to Amazon Fresh, and it looks like they've finally done that, at least in certain parts of the country. And the cool thing about this is you basically just walk into the store. There's no transaction from what I understand in person, and you just, whenever you finish shopping, you just walk out and everything happens automatically. That's pretty cool. All right, let's look at Amazon's 1-year chart. So as you can see, Amazon has been progressing upward, but they've only, in the past year, they've really only gone up 3.8%. So they've really been fairly flat over the past year and just kind of treading water. But they did have a huge run up during the pandemic, and it'll be interesting to see from this earnings report if that'll continue or if that'll taper off now that people are returning somewhat back to normal at this point. Here's some pros and cons for Amazon. One thing that we definitely like is they have a wide economic moat. Their 5-year growth is 30%. Their 10-year return is 1,350%. And since the pandemic, I'm sure like a lot of the viewers at home, we buy 95% of our products on Amazon now. And we quite rarely shop at big box retailers anymore. And it's almost gotten to the point when we go in there, it just feels like there's a ton of people and it's kind of confusing and overwhelming. So we just really prefer Amazon. We've also been impressed with their customer service. I mean, it's really top notch. It's about the easiest thing I can think of. Sometimes you return products and they don't even make you send the product back. Whereas it seems like at Walmart or Target, there's always some kind of hoop to jump through. There's a long line when you go to return something. You have to take it into the store. So again, customer service is fantastic at Amazon. So it's a very diversified company as well. It's not just Amazon.com. It's the AWS Cloud, it's Amazon Prime, and all the other products and services that we talked about in this video. Now for the cons. One negative is that the PE ratio is 60. They have a 107% debt to equity ratio. And again, we prefer that be at 40 and the PE ratio be at 15 or 20, 25. There's also a risk of future competitors. One in particular would be Alibaba in China and JD.com and companies like that that are seemingly coming out of the woodwork on the e-commerce front that could potentially compete with Amazon. Now that we've gone through some of our top earnings releases for the week, we hope this reminds you to pay attention and gives you a better idea of what to expect this week during earnings reports. We'll be doing some more in-depth analysis of a lot of the companies that we talked about today and others in our watch list over time, similar to the one we'll be doing on Alibaba very soon, and then one that we did on Tesla a couple weeks ago. So stay tuned for those updates and let us know if there are any additional companies that you'd like us to do a further stock analysis on. Thank you guys so much for watching our video all the way to the end. We really appreciate that. And we do ask that if you like the video, give it a thumbs up and also subscribe to our YouTube channel. We also have an Instagram page, a Facebook page, and TikTok. So please follow us on there so that we can learn, save, and grow together.
All of our videos are for informational purposes only and do not constitute financial advice. Please do your own research. Consult a certified and trusted financial planner who will put your interest above their own before following any advice we may offer.